Wanna invest like a pro? You're watching the perfect video. I'll walk you through how the legendary Warren Buffett invests and how you can do the same regardless of your background. I'm also going to be revealing Buffett's top 5 stocks that are perfect for anyone to invest into, so make sure to stick around for that. So, Warren Buffett is widely regarded as the greatest investor in history. At the age of 92, he still serves as the CEO and chairman of Berkshire Hathaway. Buffett has increased the stock's value by 20.1% per year since taking over the company all the way back in 1965. In comparison, the 10.5% annual total return over the same time period is nearly double. This difference may not appear significant until you consider the power of long-term compounding. To put it into context, every $1,000 invested into Berkshire would have turned into $36.4 million. That difference is literally immense. So, how does Buffett pull it off? Warren Buffett's most significant advantage is his fundamental understanding of the importance of investing. He understands that stocks are more than just prices and charts. They are an ownership stake in a real business. As a result, when investing, you must think like a business owner. Much of Buffett's success has come from long-term investments in companies with sustainable competitive advantages. These are businesses with large economic moats that generate real cash flow. The earnings and dividend payments are then reinvested and used to acquire ownership in more productive businesses, resulting in a significant compounding effect over time. Although Buffett's company Berkshire Hathaway does not pay dividends, it certainly loves receiving them. Their public stock portfolio is expected to generate over $6 billion in dividend payments in 2022. That's $6 billion in 1 year. This is on top of all their operating income from fully owned businesses like the BNSF, Railroad, Furniture Mart, etc. In today's video, I'll go over all of Warren Buffett's current dividends and explain how important they are to his investing success. Events such as the 2022 stock market's crash may make you feel depressed and unsure about investing. The media is full of negativity, but now is not the time to lose sight of your long-term goals. The reason I'm making this video today is to help refocus our community on some fundamental investing principles. There's no one better to help with that than Warren Buffett. Warren Buffett is considered a value investor. This method of investing is where you aim to buy stocks that are trading for less than their intrinsic value. This appears to be straightforward, but there is much more to it. Even the great Warren Buffett's investing style has evolved significantly over time. He transitioned from trading used cigar butts to becoming a long-term business owner. This shift to focusing on the underlying business's quality was heavily influenced by his investing partner Charlie Munger. The importance of quality was best learned through their investment in See's Candies. They weren't going to invest in See's Candies at first because they didn't want to pay more than what they had offered, but they changed their minds after some constructive criticism. Walking away from See's Candies would have been a bad idea because Berkshire Hathaway bought the entire company for $25 million in 1972. That year, the company made $31 million in sales and $2.08 million in profits after taxes. Based on his valuation of See's Candies, Buffett was initially unwilling to pay more than the $25 million he offered, which proved to be a foolish decision. As of 2007, See's Candies had earned Berkshire Hathaway $1.35 billion in pre-tax earnings, so it didn't matter whether they paid $100,000, $1 million, or even $10 million more. Since then, Buffett has stated that See's Candies has generated well over $2 billion in pre-tax earnings, and that the chocolate company continues to be a cash cow for Berkshire Hathaway. See's Candies exemplifies what Buffett seeks in a company. Through significant brand and customer loyalty, the company has developed a competitive advantage. Buffett has even said that long-term competitive advantage in a stable industry is what we seek in a business. If that comes with rapid organic growth, great, but even without organic growth, such a business is rewarding. We will simply take the hefty profits from the business and use them to purchase similar businesses elsewhere. This is exactly what he did with See's Candies. The company had limited scaling potential but was able to provide consistent cash flow. This mindset to buying great businesses at fair prices would bleed into all of Buffett's future investments. Some of you may be wondering what this all has to do with dividend stocks. See's Candies is, in theory, a dividend stock. The company is fully owned by Berkshire, but virtually all earnings are paid out to Buffett to reinvest in new businesses. Warren Buffett does not specifically target dividend stocks, yet the majority of his holdings pay dividends. This link stems from the types of businesses he targets. Dividend stocks are frequently highly profitable, mature companies with well-proven business models, which aligns closely with Buffett's investment preferences. Berkshire Hathaway is on pace to collect $6.07 billion in dividend income over the forward year from its public stock portfolio. Just 5 of those holdings will account for 71% of the total payout. Now let's dive into Warren Buffett's top 5 investments that you should consider making. 5. Chevron. Chevron is a new addition to Buffett's list of top dividend payers. He bought 163.53 million shares in 2022, giving him 8.4% ownership of the company. Chevron pays a quarterly dividend of 1.42 cents per share, giving him a forward-looking annual dividend of $5.68. This amounts to a total annual dividend income of $928.86 million for Buffett. I'm not sure about you, but I wouldn't mind those results at all. Furthermore, Chevron's dividend payment grows over time and will most likely increase in the coming months. This will significantly increase his future payments. Chevron's most recent dividend increase was 5.97%, and it appears that Chevron will soon be Buffett's first billion-dollar dividend. As I previously stated, this is a new addition to his portfolio. Therefore, what is the majority of his cost basis? Berkshire's buying activity for Chevron occurred in the first quarter of 2022, and Buffett has an estimated per-share cost basis of $146.56. His dividend yield on cost is now 3.88%. Buffett has previously sold energy stocks after a few years, but he has never owned such a large stake. 2. Bank of America. Warren Buffett bought his position in 2011 at a cost of about 14% per share on average. He owns over 1 million shares, giving him 12.9% of the company. Bank of America recently increased his quarterly dividend payment by 4.76%, bringing the annual dividend to 88 cents per share. The term electronic commerce refers to the sale of goods and services over the internet. The dividend yield on cost is thus around 6.28%. 3. Occidental Petroleum. Warren Buffett got his biggest bet yet in 2022. Berkshire owns 20.2% of the company with 188.36 million shares. Occidental reduced dividend payments during the 2020 oil crash, but is gradually increasing them again. The dividend is only expected to pay out $98 million to Berkshire at this low level. However, this is bound to increase the following year. In the future, on top of this, Berkshire owns $10 million in preferred stock. Occidental's annual dividend income is $897.95 million, based on his history with the company paying out another $800 million in preferred dividends. 2. Apple. Warren Buffett made a significant investment in Apple in 2016, and Berkshire Hathaway now owns more than 5.7% of the company. He's already gotten a good return on his investment, but I believe it's on its way to becoming his next great dividend growth stock. He expects to earn $842 million in dividends this year. His cost basis is estimated to be $34.26 per share, resulting in a dividend yield of 2.68%. Apple is currently the most valuable brand in the world with extremely loyal customers. Additionally, it has a huge stock repurchase program and has been increasing its dividend for over 9 years. I would not be surprised at all if in 30 years Buffett would be doubling his initial investment every 2 years through dividends, similar to his investment in Coca-Cola. Speaking of Coca-Cola, number 1 is Coca-Cola. Buffett has been the owner of the Coca-Cola company since 1988. This is one of the best examples of long-term investing and fits the See's Candies model. With an initial cost basis of 3.24 cents per share, that investment will pay him more than $704 million in dividend income this year. Buffett now has a dividend yield on cost of 54.2%. This means that he is more than doubling his initial investment through dividends every 2 years. Coca-Cola has been steadily increasing its dividend for over 59 years, and there is no sign that this trend will be reversed anytime soon. This is a classic example of long-term investing in a company with strong competitive advantages. So those are Warren Buffett's top 5 stocks that I would recommend you consider investing in. Which one stands out to you? Let us know in the comment section down below, and if you enjoyed this video, be sure to like, comment, and subscribe, and I will see you next time.